One of the biggest villain in investing is called inflation. Many people come to us and then say that, is there an avenue in which at least I can generate NRE rate plus another 2-3% more. They are pretty conservative in what they are trying to do. They will buy only government bonds. So which means that the risk of capital is lower. In the last set of shorts, we learned more about financial freedom. We talked about various types of asset classes. And then we also talked about balanced advantage fund and multi-asset fund. Today we are going to talk about many important things. The first thing that we are going to talk about is how to save taxes and how to increase my post-tax income. One of the biggest villain in investing is called inflation. So the kind of inflation that we are undergoing in India is approximately 7%, 6 to 7% we can say. So this is one thing. So whatever you are investing, you should make at least 7% or more. For example, if I'm going to invest from US and I'm going to invest in NRE deposit in INR, the maximum interest rate, if you're going to get it at 7%, which means that you are not creating any value, you are only adjusted for inflation, your purchasing power is the same. Luckily, for NRE, whatever interest that you're going to make, there is zero taxes. There is no tax at all. So that is the advantage. So having said that, many people come to us and then say that, is there an avenue in which at least I can generate NRE rate plus another 2-3% more, maybe 9%, 10% and 11%, with the risk being little lower. So if you want that kind of an investment, and let's assume that your investment size is only, let's say, a couple of lakhs, maybe 10 lakhs or 15 lakhs, what are the various options we have? And let us also assume that you want to take the money anywhere between the medium term duration. When I say a medium term duration, I am talking about, let's say, 3 years and 5 years and 7 years. So that I call it as medium term. So if you're calling it as 3, 5 and 7 and you're looking for, let's say, 9% and 10%, the kind of asset classes where you can look at it, as discussed in the previous shorts, is you can look at balanced advantage fund and you can also look at multi-asset fund. In a multi-asset fund, what happens is the fund manager invests in more than one asset class. He predominantly invests in equity. He will also invest in debt and he will also invest in gold and silver, which I call it as commodities. There are fund houses which will be investing in copper, the industrial use copper. So that will also give you some kind of stability to the portfolio. The most important thing when I build a portfolio, I generally look at it is called correlation and regression. Now let's only talk about correlation first. Let's not worry about regression. What we learned in our school days and college days is about correlated assets. When one asset goes up, parallelly the other asset will also go up. And if you get a correlation of 1, what it means is these two assets are perfectly correlated. For example, let's assume that gold is going from $100 to $200. In the same fashion, let's say silver is also going from $100 to $200. It means that these two assets are perfectly correlated. But if you look at over a period of 30 years and 40 years, both in the US market as well as in the Indian market, some of these assets are non-correlated assets. What is meant by non-correlated assets? In 1 year, equity gives an excellent return. The following year also equity gives an excellent return. But in the third year, what happens is gold gives a much better return. And the fourth year, gold is also giving a better return among the asset classes. So if you want to invest like this and you don't have the time and I don't have the time, see, when it comes to portfolio rebalancing, either the investor has to do the portfolio rebalancing, which is you. Otherwise, I as a distributor, I as a financial advisor, I as a registered investment advisor, I as a certified financial planner, I have to recommend you and you have to execute that choice. So that is option number 2 for rebalancing. Option number 3 is you give a sum of money, let us say 10 lakhs, 25 lakhs or 50 lakhs to a fund manager, and the fund manager does all kind of rebalancing on a monthly basis based on certain predefined criteria. What is meant by that, say, certain predefined criteria? For example, what is the PE ratio of Indian economy? What is the PE ratio of US economy? What is the price to book value? What is the dividend yield? So this will give, and what is the interest yield? What is the short-term interest yield? What is the long-term interest yield? What is the medium-term interest yield? what is the outlook for gold, what is the outlook for silver, what is the outlook for copper. Based on this, minimum 10% will be in, let's say, gold and silver, minimum 10% will be in, let's say, debt, and maybe up to a maximum of 80% can go to equities, and sometimes minimum 65% will be kept in equity holdings, net equity holdings, or net equity holdings plus arbitrage. Why this arbitrage? So that the risk level of the portfolio can be brought down. If you want this kind of a rebalancing to be done by the fund manager and you are expecting only, let's say, 9% and 10% over long periods of time, 5 years and 7 years, the best product that you have to invest is multi-asset fund. Now, when you're investing in a multi-asset fund, the next important question is whether you want to invest in an existing multi-asset fund or you should invest in a new multi-asset fund or a recently launched multi-asset fund. Within multi-asset fund, there are 3 different categories are there. One is called aggressive kind of multi-asset fund, there is something called moderate kind of multi-asset fund, and there is something called conservative kind of multi-asset fund. What is meant by conservative multi-asset fund? Conservative multi-asset fund, I can give you an example called Bajaj Finserv multi-asset fund. They are pretty conservative in what they are trying to do. What they will try to do is they will buy only government bonds. So which means that the risk of capital is lower, and they will put a fixed amount in, let's say, silver and gold, and they try to rebalance on a monthly basis, and they will try to use the ETF route so that it is a inflation hedged product. That also they will try to do it. But when it comes to equity, what they will do is they will only invest in large cap stocks, and they will also invest only in dividend yield stocks, and they will ensure that you will get about, let's say, 6% and 7%, which is tax free. So I, being in India, and let's assume that I am in the 30% tax bracket, even if I get 7% on a multi-asset fund, which is equal to 10%, like investing in fixed deposit. This I call it as conservative multi-asset fund. There are other people who generate better also. So my suggestion is that having decided to invest in multi-asset fund, you should look at both existing as well as new. Please understand, as the asset size of the multi-asset fund goes up, the investment opportunity, for example, I want to, let's say, 25,000 crores are there or 20,000 crores are there. For 1% allocation, the fund manager has to find a stock or a kind of a ETF where he can invest 200 crores, because 20,000 into 1% is 200 crores. So my suggestion is that you can balance between existing multi-asset funds and new multi-asset funds, and with the new multi-asset fund, the fund manager will have clear, let's say, 30 business days to make the investments. So which means that he can build the portfolio based on the current market trends. So don't miss the opportunity. Multi-asset fund is something which is very good for if you are a retired person, or if you are an NRI, or let's say assume that you got something you sold in a real estate and you want to generate kind of a decent return of 9%, 10% over long periods of time. So multi-asset fund is really good, and it also has exposure to silver and gold. All investments that you're going to make are subject to market risks. So nothing comes without risks. For example, whether you are going to invest in real estate, that will come up with some certain risks. If you are going to invest in gold and silver, the prices are fluctuating like anything every day. That is also coming up with risk. If you're going to invest in direct equities, obviously, yes, it is going to have risks. Same thing with mutual funds. All investments are subject to market risks. Go through all the scheme related documents. Make a decision after going through all the documentation. And whenever you have doubt, you please reach out to us. Get your doubts clarified. Get complete clarity before making any investments.